Good morning, traders at CMC Markets. This is Trevor Neal, analyst at RRG Research. I'm recording this update on the morning of Friday, 6th of October, before the release of the US employment data. So I haven't got that information. Probably by the time you are listening to this, you will know what actually happened. There's a lot of tension built in front of this issue. The expectation is that the employment numbers will be quite good. There will be a drop in the unemployment, and this is built into the price action over recent days. So any sort of disappointment in that number is likely to have a big impact. So it could be quite a volatile session. Probably it's already happened. So let's have a look at how it is positioned, what it's vulnerable to in front of the release itself. Now, we're going to start as usual with a relative rotation graph of the major stock indices versus the MSCI World. So this is indexes versus an average of the indexes. So it's not the absolute performance of the indexes, it is the performance of them relating to each other. So we've got, we can see over in the improving quadrant, we've got the DAX, the stocks, the CAC, all in there, the European indices, except for the FTSE, which is way out and swinging around very well, northeasterly direction, high up reading, indicating that effectively by holding its own, it's actually outperforming the rest of its group. We're looking at the US indices. The Nikkei is actually in the weakening quadrant, but pointing upwards. The Nasdaq is pointing westerly in the weakening quadrant. The S&P is close to the middle there and a little bit stuck, and the Russell the same. So the US indices are holding with the, if you like, the world group, with the Nasdaq, which is we're used to seeing as an outperformer. Yes, it's the furthest to the right, but it's not in a great direction. Therefore, on a relative basis, it is weakening. We'll start with the S&P. It's a daily chart, but I brought in a lot of data back from August 2020 just to see the context of where we are. We've got these significant, the all-time high there from 2022, lower high, the attempt most recently to break up there in August to an assault on that high, but it failed. We've had a lower high. We've broken a significant low at 4,330, and also this is not a great uptrend line, but we've definitely got higher lows, and we've got two higher lows here. We had a breakdown, retrace, and then weaken again. It's looking vulnerable and weak, and it's been selling off in recent sessions in front of the release of this employment data. The next support in the big picture is 4195. Now, looking at the daily chart, zoomed in, we can see this 4195 support here, quite good support, a little bit below us. We can see resistance from this high here at 4330, this low in here. That's good resistance. Then it extends up to what you could say was the head and shoulders top, high, higher high, lower high, that we've got intact here with an unfulfilled objective. The MACD is negative, as you can see. The RSI is weak, but actually some loss of momentum in here. So given negative figures, then I think we're going down to the support at 4195. Given positive figures, then I think we could push up to where the resistance is quite heavy and substantial at 4330. Let's go now to the Nasdaq. I've started with a big picture using the daily chart just to show an incredibly vulnerable point it's at now. This 14,550 level, we've got lows here from August, and then most recently just bouncing holding it. But look what's below us. There's nothing below us until we get to 13,600. So there's a potential for a big drop here. So any numbers which disappoint the market could result in a big impact, particularly in the Nasdaq. However, it is holding at the moment, and if we were to let's zoom in a little bit to give the actual levels of the break. If the market does hold here, then we could expect to meet resistance of 14,900 to 14,960, which is this gap here, a filling of the gap. That will be resistance. Then we've got major longer term resistance at 15,200, and then shorter intermediate term resistance 15,514, and major area at 15,611. A break of that, and then we'd be pushing back up to the 15,900 level. But you can see here the MACD, it's coming down. It's still below its signal line, but it's close to crossing. Any steadiness near here is going to give an intermediate term bullish message. On the RSI, we see that the market has made a low, the same low, so that doesn't infer that this is going to hold, and then it's rallied a little bit to neutral, so it's gone down to the 50% level. But basically it could go either way, but the big vulnerability, and I warn you, the big vulnerability is for a breakdown. Very specifically, the low here is at 14,428. Clearing that opens up to a potentially extremely large and fast drop. But of course it is a support level and it can hold here. Starting with Meta, if a break of the high here at 310, two highs in here should indicate that we run up to 325 high here back from July, and that could be relatively quick and easy. A break of this minor low here at 287.75 would indicate a retest of the two bottoms down here at 275. So 275 is the support on the downside, and on the upside, if we break the break point is at 310 for a move up to 325. Google, we're already steady on this for the upside, that is, because we're closer to the high. So the high here is at 139, and so a break up here should take us through that, give us a lot of support and continuing this uptrend and the pattern of higher lows. A break down through the low of 127 would break the pattern of higher lows and put Google back with the rest of the group, which is relatively weak. So this is the best looking chart if we get news which breaks us to the upside. Now, big picture look using the daily chart at Netflix, as we're retesting this important high from February at 378. I'll become more precise with this in a second as we zoom in. If we break up, then we've got resistance at 397, but you know we've got a massive resistance there. So this is the one we like least if the market flips back to an upward move led by the FANG group. So here we're looking at the zoomed in a little bit on Netflix. That blue line here, the support line, is from that February top, and it is precisely being tested and held us and stopped us going down for the last few days. Today, in front of the data, it's looking weak and at that point, but you know nobody knows the data yet. So it's set a new low to break to confirm the breakdown. That's the low of 366. So 366 at this point is the trigger to indicate this breakdown of the Netflix, the weakest of the group of the FANG stocks. It should then meet very substantial resistance at 410. So big vulnerability in this one. It could be topple over the edge. if today, given this kind of important news, and this I think will lead us down, and probably Meta or Google better than Meta to lead us up if the news is positive. And now moving to the relative rotation graph of currencies versus the dollar, major currencies versus the dollar. Everything is on the left of it, and that means that the dollar is strong, which it has been quite dominant, as you know, over recent days. Here's the euro, just turning up a little bit of a bounce in the euro, pound, a little bit of a bounce, but not so in the Australian dollar and the Canadian dollar, or the Japanese yen, a little bit of a bounce too. So this is in a reaction to the severe movement that we've had in the dollar over the last days and weeks. Now moving to the euro. The euro has been going down as the dollar has been going up. In the last couple of sessions, as we saw in the RRG chart, we've had somewhat of a pullback move, but it does look like it's a rally within a very, very strong downtrend. To break the downtrend, we'd have to go through 105.98, 106 level. We have got a bullish divergence, so we have lost some momentum on the downside, so we are being warned potentially that a low is in place, but it's against a very powerful downtrend. If it does bounce, then we can expect resistance to come in quite quickly at 106.36, extending up to 108, a big area of resistance there. So, given the strength of the trend in the dollar, it's hard to see that even if the news comes out and weakens the dollar, that will be any sustained move and change of direction in the dollar's trajectory. Now, finally, cable. Been going down with the dollar advancing, and there's lots and lots of resistance above. But what we do see here is that the MACD has actually crossed. So this little bounce that we saw on the RRG chart over the last three sessions has been enough to turn the RRG lines up and the MACD lines up. We have also got a bullish divergence. First time, low, lower, low, lower, low, lower, low, lower, low, lower, low, lower, low, and then higher low here. So we've got a bullish divergence, a small one, I must say. But this looks as though it could rally. If it does do so, then it's 123 is the first area of resistance, and then the tough resistance is up at 125. The trend is strongly down, like we saw on the euro, or the trend is strongly up for the dollar. There is some loss of momentum down here. Of the two, sterling and the euro, I think that sterling has more potential on the upside. Of course, if the euro were to break its downtrend line, then that is a sort of major change in the whole dollar long-term picture. But at the moment, the trend is strong, still up for the dollar. Counter-trend move in play, imminent important data. But will the data, even if it's negative for the dollar, actually cause a change in the trend in the dollar? Maybe a couple of days later, the trend has reasserted itself. Well, we'll know soon enough. Nobody knows what the data is going to be, but there are expectations, and that leaves the market vulnerable. I thank you all very much indeed for listening, and I wish you the best of luck trading over this data. And by the time you're listening to this, it will be over, but hopefully we've got scenarios and strategies to participate, whether it's good or it's bad, and disappointment, and keeping in view the strong trends to keep the context clear of what is really going on in the background. Thank you very much indeed. Have a great weekend, and may the trend be with you. Goodbye.